Hello, grads of FinLearn Academy and fellow traders. Right. So let's do a weekly recap on Nifty and accept what to expect in the coming weeks. We had a sharp move in Nifty from 15,600 odd levels to 17,000. So it was a good move. Right. See, two things has happened in this move. One, we have breached this falling channel on the upside. So this was the breakout level, I have been pointing out in the previous sessions. Once the channel breaks on the upside, we should see a good move on Nifty. And second is, it has gone past the 200-day moving average. Still, Bank Nifty has not crossed it, but Nifty has crossed the 200-day moving average, which is here, right? So for trading immediately, we might see some choppiness going forward because the move was too fast. So now the new support level for Nifty for short-term traders is the 200-day moving average and the gap here. So has this move matured enough? So I will just take you to the cycle degree on Nifty. See, remember we had this down cycle in which we can call it as a harmonic pattern, also AP equals to CD, in which this leg was close to a 12% decline. We had this 12% decline odd here also. It just shot by little more, and post this decline, if you see, the rise in market was around 12%. So right now we have seen a Nifty rally of approximately 11%. So we can say the move has matured, but we can see another 100 to 200 odd points in the markets. So now let's use measuring techniques on the upside. First, we plot the Fibonacci retracement of this entire leg down. And if you notice that the golden ratio is coming somewhere 62% retracement of this move. So Nifty has retraced 62. Can it further go all the way to 17,700 or around this high? So till the 200 days not breached, we can see an upside move in Nifty towards 17,600. So for traders, keep a stop loss at the 200-day moving average, and the market is a buy on dips or buy on declines. So, and on extreme short-term charts, if I plot my Bollinger Band, markets look like stretch on the upside, but that can't be a reason for it to correct. So we can see a further test of Bollinger Band on the upside towards 17,600. So for the remaining week, we can see choppiness within the high intra-week volatility, in which just follow this chart, which is the 200-day moving average. I'll again plot it for you. So this is the 200-day and the 20 upper end of the Bollinger Band. This is likely to be the near-term range for the market. Let's see which side it breaks. But on the downside, you have decent support at or around the 200 EMA plus the 20. So I would take this entire area 17,000 odd levels as a support area and 17,600 as a resistance area for Nifty. So we can see further 2-300 moves on the dips on the Nifty on the upside, and the first dip toward this is a swing traders buying opportunity, and from here on to trade on the long side, 17,000 to 600 is a buying, and keep your stop loss below the middle end of the Bollinger Band, which also is the 20-day moving average. So now let's see what lies ahead in Bank Nifty. The Nifty, we have clearly seen the break of 200-day, but if you see Bank Nifty, it has yet not breached the 200-day moving average. So I'll right click, add 200-day moving average, on Bank Nifty. So Friday's high was exactly at or around the 200-day moving average. So, and also there's a gap running here. Plus, Bank Nifty is confined in this medium term channel. So once we break the 200-day moving average, we can see a move in Bank Nifty towards 38,000 level or the upper end of the channel. So keep this formation in mind. And the support levels for the Bank Nifty will be the gap area that will be like Wednesday's candle low around 35,500. So Bank Nifty, the way we saw a strength in Nifty after crossing the 200-day moving average, Friday, Thursday's high on Bank Nifty runs around the 200-day. Once this high is crossed, possibly we should see another leg up in Bank Nifty, which can take it all the way toward the upper end of the channel, which is around 38,000 level. So going forward for the next week, the bias for the markets remain positive. Volatility is likely to is here to stay. Any dips or declines, figure out is this decline a buying opportunity, and currently any decline in Nifty towards the 200-day moving average or Bank Nifty towards this gap area is yes a buying opportunity with stop loss below Thursday. Keep all your stop loss below Wednesday's low. If there is a dip, buy, and once Bank Nifty goes past the 200-day moving average, we can see another 1,000, 2,000 points rally in Bank Nifty, which will again lift Bank Nifty also up. So going forward, next week the bias remains positive. Choppiness will be there, but our levels for entry on longs are clearly defined, and also the breakout levels in Bank Nifty is the 200-day moving average. With these inputs and parameters in place, you can plan or strategize going forward for the next week. That's all from my side, friends. Thanks and have a nice weekend.